So we're going to continue on with this chapter. The next question we're going to do is PQ2-13. I highly suggest that students, before watching this video, before I talk about each transaction, attempt it yourself. So pause the video, attempt it yourself, and then resume the video and see if you're doing it correctly. So you could start testing yourself on this material. So let's dive right into it. So once again, it's always good to read the description to put yourself into the perspective of the business. So you have always been very good with a camera, so you decide to start a business taking photographs at weddings. So you're a photographer. You already have all the equipment collected over many years, so starting your own photography business will be inexpensive. So essentially, using the critical enhancing questions, analyze the below noted business activities for your new photography business. Record the activities using the expanded accounting equation. The chart is provided below. Ensure the totals at the bottom of the chart equal. So that's the main accounting equation. So let's dive right into it. So once again, I want you to think about it from a logical standpoint and put yourself into the shoes of the business. So you as the owner invest into your business. So usually students get confused because they think that money is leaving their pocket, but that's your personal pocket. Remember that. But your business is gaining money. So assets is going to go up by 5,000 and owner's capital is going to go up by 5,000. Next, number 2, the business gets a loan from a family member for $2,000. Remember, when you get a loan, cash goes up. So your assets goes up because cash is an asset. It's a future benefit. Sorry, this is for $2,000. And since you got a loan, you have to pay it back in the future. That's a future obligation. That's a liability. So your liability now also goes up by $2,000. Number 3, using a credit card registered a business name with Service Ontario, $60. Remember, a credit card gives rise to a liability because you're going to pay off your credit card at a later date. Your liability goes up by $60. And business name is considered to be an asset because it's a future benefit. Remember, it's an intangible asset. We'll talk about intangible assets more in later chapters. But intangible asset is an asset that does not have physical substance, but it still provides you with value. So by physical substance, we mean that we can't physically touch it like a building, but it still provides value. $60. Next, number 4 is paid for 800 of supplies, including HST. Remember in the past we had questions that were plus HST. This already includes HST. So keep that in mind. So with a credit card, the credit card bill will not come in until the end of the month. So once again, supplies is an asset. So our asset is increasing. Since we paid with our credit card, our liability is also going to increase. Okay. Number 5 is rented the smallest booth at the Canada Bridal Show. The show will take place on September 11th, 12th, and 13th at the Metro Toronto Convention Center. The cost is $2,500 plus HST. So this does not include HST, so we have to calculate this amount. Remember, the formula for after tax, once again, is going to be the before tax amount. In this case, it will be $2,500 times 1 plus the tax rate, which is 13%. HST is always 13%. So simple calculation, 2,500 times bracket 1 plus 0.13 bracket. So sometimes students get confused on how we get 0.13. So for example, 100% equals 1. To calculate that, we're going to take the 100 and divide it by 100. So this should be 1, not $1. Let me fix that up. Whereas 90% equals 0.90. To calculate that, we take 90 divided by 100. 80% equals 0.8. To calculate that, we take 80 divided by 100. In this case, 13% equals to 0.13, which is 13 divided by 100. So for number 5, this one is a little bit more complicated because even though we rented the smallest booth, we haven't used it or consumed it yet. So this doesn't give rise to an expense. So right now, we placed the order for it and we pay for it using the credit card. So our liability is going to increase by this amount. However, since we haven't used it up, now the bridal shower owes us the service. And in that case, that gives rise to a future benefit. So assets goes up and so does liabilities. Number 6 had 1,000 glossy flyers printed to distribute at the bridal show at a cost of $750 plus HST. So same situation. Let's do a quick calculation. So 750 times 1 plus 0.13. So it's 847.5. And with this, we also paid with our credit card. So once again, our liability goes up. And it's the same situation as the booth. We haven't handed out the flyers yet. So it can't be an expense. So these flyers are going to provide us with a future benefit. So that's going to be an asset. Number 7, now we actually attended the bridal show and distributed all the flyers. And as a result, we were able to get a large number of names to contact after the show. So now we actually used up the booth and the flyers. So now our assets is going to go down by the total amount of these two. And by the same token now, our expenses is going to increase because we actually used up or consumed these costs now. So expenses is going to increase now. Number 8, at the show, you spent $42 on food and drinks, paying cash. Since this was part of running your business, this is very important. You can record this as part of your business activities. This wasn't for personal use. This is a business transaction. It's a business activity. So you spent cash on this. So remember, cash is an asset. So negative 42. And now your expense is also increasing because this is going to be labeled as food or meals and entertainment expense, right? 9, you were hired for 2 weddings, one on Saturday and the next on Sunday. Both couples have ordered the deluxe package for $2,000. This is a tricky question. This does not constitute as an entry because nothing's happening within your accounting cycle, or sorry, within your accounting equation, you could say, right? Simply put, we were hired, but we didn't perform the service yet, and we never got paid yet. So nothing changed. So in this case, there is no entry. Number 10, you attend the weddings and take all the photos. So now you've actually attended the weddings and you performed the service now. At the end of Saturday and Sunday, each couple has paid you cash of $2,000. So we got cash of $2,000 each. So our assets goes up, but now we actually earn that revenue. So our revenue also goes up. So once again, the difference between 9 and 10 is 9, we were hired, but we didn't do anything and we never got paid. If we got paid in advance, then we could increase our assets because we got cash. And then we could increase liabilities in the form of unearned revenues because we haven't performed the service yet, so we have a future obligation. But that's not the case. But number 10, we actually earned it and we actually got paid. Number 11, you received a credit card bill and paid for all the business expenses immediately. So now we have to figure out of our liabilities which ones relate to our credit card bill. It's going to be transaction number 3, 4, 5, and 6. Number 3 was to pay for the business name. Number 4 was for supplies. Number 5 was for the smallest booth. Number 6 was for the glossy flyers. Number 2, even though it's a liability, it's a loan. So it's not your credit card bill. So simply put, we're going to sum up these 4, which is our credit card bill, and we're paying it in full. And how else would you pay your credit card bill? Cash. Cash is an asset, so cash is also going to be decreased. Now, number 12, at the end of the month, you only have $600 of supplies left. So you started off with $800 worth of supplies. So pretend that all your supplies are in a drawer, right? So we have $800 worth of supplies. Now you open that drawer at the end of the month and only 600 are left, right? Only 600 are left. So the difference of these two numbers is what you must have used up or consumed throughout the period, which is the definition of an expense. So we used up the $200 worth of supplies. So in this case, our supplies is going to be decreased by $200. Remember, supplies is an asset. And now our expense is also going to go up by $200. So now, so automatically all the totals were calculated for you below. I put a formula in there. But for example, if you were to do it for assets, you'll do 5,000 plus 2,000 plus 60 plus 800 plus 2825 plus 847.50, subtract 3672.50, subtract 42, no entry, you ignore that, plus 4,000, subtract 4532.50, subtract 200, and you will arrive at 7,085.5. You do that for all of them. Next, what is your financial position at the end of the period? In this case, let's actually run the formulas through and calculate the accounting equation. So first, let's start off with profit. Remember, profit is a product of revenues minus expenses. Our total revenues is 4,000. Our total expenses is 3,914.5. So our profit is 85.5. Now let's figure out retained earnings. The retained earnings, once again, is a product of profit minus dividends. So 85.5 minus 0, since we had no dividends in this question. That's fine. That's perfectly normal. It can happen. The company does not have to pay out dividends. Simple as that. Now to calculate ending equity, we're going to take the owner's capital, which is 5,000 plus the retained earnings, 85.5. Now to calculate total assets, we're going to take liabilities, 2,000 plus equity, 508, 85.5. So as you can see, the accounting equation balances. So once again, it's 708 85.50 equals to 2,000 plus 5085.50. So that being said, the financial position is fairly good because the company does not have much liabilities. That's always a good sign. And assets are also very high and they're funded through equity. So yeah, that answers our question. We solved the accounting equation. Would you consider your financial position good? Why or why not? I just explained that. Now the next question is, how profitable was your business during the current month? The profitability was fairly low if you look at it, only $85 because your total revenues were 4,000, but your total expenses were 3,914.50. So you only earned a profit of $85.50. Do you think you should continue with the business? That's a tough question because it's still a new business. Think about that. It's a fairly new business. It's the first month of operations, and you still broke even and pulled in a little profit. This type of business takes a long time to build, up to 3 to 5 years. And once you're well established, then that's when you start seeing significant profits. So I would definitely continue with the business. Do you think the bridal show was worth the expense? So the bridal show, so they did indicate that they did receive a lot of contact numbers. So in the long run, it definitely could be worth it because those contacts could turn into significant revenues. And at that point, the expense that you've incurred for the booth and the flyers, you'll have enough revenues to cover that. What do you think might be some key success factors for a business like this? What factors could cause a business to fail? That's a very good question. So obviously key success factors are quality of the pictures, the prices you have compared to other businesses within the industry, and obviously your creativity with how you take the pictures and all that stuff. The factors that may cause the business to fail are your prices are way too high, you're not flexible with what the customers want, and your inability to build long-lasting relationships and poor quality of the photos.